Good morning, everybody. It's AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn up 2 3/4 at 434. May soybeans were unchanged at 1174.5, and May Chicago wheat was up 5 at 562 3/4. This morning, we had an export sales announcement of 254,000 metric tons of soybeans to unknown destinations for the 24-25 marketing year. Also released this morning was March CPI data. Came back slightly higher than estimates at 3.5%. That was up 0.4% from last month, signifying an increase in that metric for the third straight month in a row. So I know some of the outside markets did not react kindly to that news this morning. I think stock market now is down over 400 on some of that inflation news. Good morning, guys. I think one thing to note here this morning was an interesting story published overnight that the USDA is paring back a couple of reports that they commonly release. One notable being their cattle inventory report that they put out a couple times a year. So it's limiting, I think, some transparent data in the cattle markets. And certainly, I know National Cattlemen's was out this morning with some pretty harsh comments for those folks. And then also on the USDA side, they also decided to pare back county level data for crops. So I think there's, certainly some unknowns about this. I think we've seen it before when they've got budgetary concerns that they use it as a levering tool in some capacity. But Justin, I think just to kick us off this morning, a couple initial thoughts. I know we talked a little last night about it, but what's your initial interpretation of this?
Yeah, I don't know. I think it, more data is better, in my opinion. So to get county yield data not updated, I assume that they're obviously going to update the finals for crop insurance purposes. But Dustin just brought before the show talking about CPI. I mean, our debt has gone up $20 trillion in 7 years, and we can't afford to do county yield estimates. So it's kind of silly, I think, in some of the areas you're cutting back. And the July cattle report, I mean, coming off all-time highs in cattle, you have rampant inflation. And to cut out more information to the market seems a little silly to me. Seems like there's better areas to cut, in my opinion. So
yeah, no kidding, right? Yeah, Rylan, a couple of initial thoughts on just the cattle report there. I mean, from your perspective, I mean, it's something you guys lean on pretty heavily there for a couple times a year,
Absolutely. I mean, and this report was going to be a pretty big precedent setter, I think, just going into the last half of the year, because that's where the big question mark is. We're at record all-time highs in the cattle market, and more data the better right now to make a more informed decision on price discovery. I mean, the industry, these are really valuable tools, and we've seen this before. I mean, they did this back in 2013. They canceled the July report back in 2016, and they brought it back in 2017. So this could just be kind of a bargaining chip to hold over somebody's head that may need, if they want to allocate more funds towards NAS or the USDA. That's kind of the way that I've always kind of understood when they start doing this, that they will eventually bring it back. So I don't want to say that it's just gone forever. I mean, there's a chance that it is, but we know that the lack of transparency is a big deal, and these reports are, especially this report in cattle, is going to be a very significant market moving report. There's no way around it. So hopefully they can get whatever funding they need for it. I doubt at this point that they're going to get that before July. So I think we're just going to have to kind of follow the data that we have publicly available now just for direction, but we're not going to have a calf crop update till January 2025 now. That's a long time. There's kind of a lot of space between now and there, and that just could make it all that much more shocking to the market. So volume and transparency is really what kind of makes these markets happen for price discovery. So anytime you see that kind of restriction or some of these significant reports go away, it's hard to say if it's going to have any impact on price, in the interim, but it's never a good thing, in my opinion. So, I mean, that's kind of my 2 cents on it. I mean, but I just thought it was funny that the press release they came out with last night was the exact same rationale they came out with in 2016 verbatim. So they didn't even take the time to, come out with anything new statement wise. So I don't know. Maybe I'm just cynical about the way that the government does their press releases, but it was verbatim the exact same excuse. So maybe they just need cash.
Yeah, that's good stuff. We get gonna have Conab and USDA out tomorrow, guys. Conab will be released before USDA. USDA will be 11 o'clock Central. Dustin, couple initial thoughts, I think, as we go into the report. I don't know that we're looking for anything earth shattering here, but just a couple thoughts on what we're looking at there.
Yeah, so we did have lower corn stocks on that last quarterly stocks report, slightly higher bean stocks. So they should probably reflect some demand changes based on those. March 28th report, that is. Otherwise, I don't think that this report is anything earth-shattering. It's not till we get to the May report that we're reminded of that 2023 balance sheet. So, 2024 balance sheet. We will not have that in this report. It won't be till next month. We are still kind of on edge here as a group. We still have the commercial side undersold from what we can tell on the COT report, what we can hear anecdotally, what we've heard from commercial partners as well. And funds are still very, very short, and they got shorter after that report. There hasn't been a catalyst to scare them out of their corn shorts yet. So that's just something to keep in mind. Until we have that catalyst, they have a lot of staying power with these wide carries, and that's just going to be a headwind for us if we start to actually get that grower selling towards the very end of this calendar or this marketing year, 23-24 marketing year. So we're just being very cautious on this. I think the need to get more of a floor for the 24 season is going to grow over the next 60 days for us, and we'll keep you posted on that.
Yeah, the one thing I was going to add to on the report is there's been this really big discrepancy on USDA versus private estimates for both corn and soybean production out of South America. So, private estimates have been kind of inching up to 3 million tons at a crack on the soybean estimate. There's still big out trade, if you will, on corn, for especially, safrinha crop and what acres ended up being. So I would say that would be the one thing that we might see some changes on if the government starts to kind of notch down production towards some private estimates, or if they kind of stay firm. And I think corn last time was over 10 million ton difference, which, it's 400 million bushels. So I think that kind of changes the whole, trade matrix when you look at corn demand and what our potential would be for, any kind of summer demand. So obviously we talked about yesterday, they've been getting some rains. So that's alleviated some concerns. But the big question I have is what acres ended up being. So you kind of have an idea of what that starting point is. And like we said, the starting points were pretty different from private and USDA estimates. So that'd be the one caveat I'd have there as far as like what to look for on the report. And then, as far as the overall theme, like Dustin said, it's kind of same theme as far as stuck until we're not, it feels like we keep trading against these moving averages every day between the 25, 50 day, just chopping people up in between there and trying to make things look like they turn up, like beans yesterday, kind of looked like they were turning up, or the day before, and then they fail, and then they look like they're turning down, and that's a buy. So just really choppy around these levels here.
Yeah, definitely. Ben, any thoughts out in the East there?
Yeah, I think that we're still probably 10 days to 2 weeks out if weather cooperates to see people start planning. I did see this morning, it looks like it's going to be kind of cool here. We have a little cold front come through north of I-80, maybe a little bit of concern for some wheat, even if it's not really merited. It'd be the first time that we had something like that with, I've heard estimates that wheat is 2 to 3 weeks ahead of itself with a really mild late winter and really mild early spring so far. So I think that bears a little bit of one eye on it. Maybe an opportunity to get caught up on wheat for some people. I'm with you. I think the moving averages is really creating a choppy trade. You wonder how much lower the moving averages can go at these levels to kind of disincent the fund to exit. We do think there's somewhat of that as an automated trade, but boy, has it really been resistant to kind of hitting the turbo button to see some covering as some of these moving averages are coming together, and we've seen some strength. At least some flatlining in price to be above those. So it's a really aggressive seller yesterday in corn at the 50-day. So I think the market's I think we're getting ready to coil and make a move here pretty soon. I hope that it's higher, and we'll see. But it has been very choppy.
Okay, very good. Ryland, we talked a little bit about the cattle report there. Let's talk markets just for a minute here. Thoughts on hogs, feeders, livestock. What do you got?
Yeah, I mean, hogs have been kind of the story, right? We're back. We got June hogs as high as 109 yesterday. And I think we've been talking about the cattle hog trade a couple times about this June spread, and it seems like the market's kind of pushed that down pretty wide, or pretty narrow at this point to about 60. I mean, everybody's trying to figure out where we're going to wind up in June, and towards the higher end of the spectrum, 120 June hogs, 130 June hogs. You're talking about near record highs for them. So if cattle can do it, why can't hogs? I think that's kind of the thought process right now. If packers are able to just kind of keep pork prices high as we kind of go into the higher demand months. So I think that's something to keep in mind, that we're seeing really good activity right now. There's some really good opportunities. You've had hogs 7 days straight up without really looking back. I don't think it's a matter of supply tightness at this point. It just seems like that's kind of the favored contract right now in the meat complex. As far as the cattle goes, not much cash trade to speak of right now. Maybe some light kind of off sales right now, but the market's a bit concerned that we could see steady, possibly even lower trade. Right now, slaughters have been pretty good, so it doesn't seem to be a good reason why we'd really back off the buy. So we'll see what kind of shapes up. It's still pretty early in the week, so I imagine that's going to start to ramp up here Wednesday, into Thursday. From that standpoint. But yeah, I mean, we're back above the 100-day moving average in April. And I think right now most of the volume is going to be in the June. So I think just all eyes on cash. I think there's just there's some nervousness about the next couple months, and just the lack of transparency now is going to be a problem, I think, for the back end of the market to deal with at some point. I mean, and just to kind of put a bow on that discussion, I mean, like, there are differences between the January report, inventory report, and the July. The July report is significant because it's a survey of like 10,000 of the larger cattle operations versus 50,000 in the January report. So, I mean, you really get a pretty good scope, when you put both those reports together. And so it's just a huge bummer. And I think just overall, if any extreme moves come in this next 6 months, it's probably going to be that report's probably going to be the scapegoat, or the lack thereof, why we're seeing that kind of price action, if it does indeed come to fruition, up or down to an extreme. So
Rylan, is, I know there's a lot of, certainly a lot of resources at the USDA and stuff like that, but, private groups within the cattle sector, is it still pretty good information sharing across, your the businesses and the commercials and things like that you still get some of that data to give you an idea?
I mean, like, to get the survey of that magnitude is very difficult. I imagine the packers have resources that they have their own kind of proprietary methods to track a lot of that data on their own. But this one's, the USDA would do this through 3 separate methodologies. They would do telephone enumeration, they do mail in, mail out. And they also have a web portal that they use. So, like, they've got a lot of systems in place.
Yeah.
So, I mean, like, it's really difficult to have that kind of accuracy and that kind of information on the private level, So, I mean, it's the most important feature of that report is going to be the calf crop and the insinuation of herd expansion or contraction. So, I mean, that's something that like we really need to know, and the lack thereof could cause some, big problems here as far as price discovery. But I don't know if it's bullish, bearish. Just don't know.
Yeah, no, I understand. It's good stuff. Just came into the open here. We got May corns up 2 1/4, 4.33 1/4. May soybeans are up a penny, 11.75 1/4, and May Chicago wheat's up 3 1/2 at 5.61 1/4. Couple administrative things I'll reiterate. Tomorrow we will have Conab out in the morning, followed by USDA at 11 o'clock Central. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate everybody's thoughts and comments this morning. We look forward to talking tomorrow. Hope everybody has a great day.